Good morning, and welcome to your pre-market report for Friday, 30th January 2026. Let's take a quick look at the global cues, domestic trends, and stocks to watch before the markets open. Major U.S. stock indexes finished mixed to slightly lower on Thursday, as investor focus remained on earnings and tech sector performance. The S&P 500 dipped about 0.1%, while the Nasdaq fell around 0.7%, pressured by a sharp sell-off in Microsoft and other software stocks. In contrast, the Dow Jones Industrial Average rose modestly, buoyed by strength in select non-tech names. Asian stock markets opened mixed and cautiously lower this morning, with sentiment tempered by a choppy U.S. session overnight and ongoing macro uncertainties. The Nikkei and Hang Seng traded lower, while the Kospi posted slight gains. GIFT Nifty futures as of 8 a.m. was trading at 25,393, thereby indicating a negative opening for the Indian markets today. Crude oil prices remain firm and elevated, supported by persistent geopolitical risks, especially concerns around the Middle East, as well as supply disruptions and broader risk aversion in markets. Copper has surged to record highs, with prices breaking above historic thresholds as speculative buying and demand expectations from infrastructure and green energy sectors continue to lift the red metal. Food delivery platform Swiggy reported a wider consolidated loss in Q3 FY26, with net losses rising 33% year-on-year to 1,065 crore rupees, compared to a loss of 799 crore rupees in the same quarter last year, as investments in growth and competitive intensity continued to weigh on profitability. Diversified conglomerate ITC posted a consolidated net profit of 4,931 crore rupees in Q3 FY26, coming in below Bloomberg estimates of 5,232 crore rupees. Earnings were impacted by a one-time provision related to the implementation of new labor codes, along with a high base effect due to an exceptional item recorded in Q3 of the previous financial year. Mining and metals major Vedanta delivered a strong set of numbers, reporting a 61% year-on-year jump in consolidated net profit to 5,710 crore rupees in Q3 FY26. Revenue from operations also rose sharply, up nearly 37% year-on-year, driven by improved commodity prices and operational performance. Carrying over mixed to negative sentiments from the global markets, Nifty is expected to open lower and supports at 25,170, followed by 25,000 may be tested. In case of a reversal, positive momentum may take a pause at the resistance level, placed at 25,455. Continued foreign institutional selling, a weakening rupee, rising crude oil prices, and lingering global macro uncertainty, including geopolitical and trade tensions, could keep sentiment subdued and volatility elevated as markets brace for the upcoming union budget and mixed earnings signals. Potential upside triggers include strong Q3 earnings momentum, robust domestic institutional buying, optimism from the India-EU trade deal, and encouraging macro data or policy cues around the union budget, which could help stabilize the markets or spark renewed buying. Yesterday, FIIs once again turned net sellers of about 394 crore rupees, while DIIs remain net buyers of around 2,639 crore rupees. That's your market snapshot for India on January 30th, 2026. For more such updates, don't forget to like, subscribe, and hit the bell icon. Wishing you a focused and profitable trading session ahead.